What's up, guys? Coming at you with a new video. Today, we're talking about something that's not politics. This is actually referring to some of you investors out there. Um, I invest through Robinhood as well as Fidelity and Coinbase. Um, and this article is a little interesting. So Robinhood, the SEC charges Robinhood with misleading customers about how it makes money. So just a little bit of a spoiler, they cheat you out of money. Now, it may not be everybody, but it is some of you guys that maybe tried in higher volumes. I would say check and see if you are included in this, because a lot of people don't know exactly how they're making their money. They thought, that it was just one way, but it's actually not. All right, so we're going to take a look at it and see whether or not maybe you have had problems, because I know I've had a couple problems with Robinhood in the past. All right, so the Securities and Exchange Commission on Thursday charged Robinhood with deceiving customers about how the stock trading app makes money and failing to deliver the promised best execution of trades. Robinhood, Robinhood agreed to pay a $65 million civil penalty without admitting or denying SEC's findings. A lawyer for the company said the practices do not reflect Robinhood today. Silicon Valley startup, which has eventually plans to go public, they're gonna do. I think they're getting ready to offer their IPO next year. I think. Um, so if you want to invest in Robinhood, on Robinhood, that's a little inception-y right there, but you'll be able to do that. Uh, they've raised more than $1 billion in funding this year, lifting Robinhood's valuation to $11.7 billion between 2015 and late 2018. So if you were on the platform then, Robinhood made misleading statements and omissions in customer communications, including in the frequently asked questions page on its website about its largest revenue source when describing how it made money, namely payments from trading firms in exchange for Robinhood sending its customer orders to those firms for execution, also known as payment for order flow. So that's what they said was their largest source of money, was, hey, we send it, the orders that we receive, we send through this company to increase their order flow, and we get paid for that. One of Robinhood's selling points to customers was that trading commission-free, uh, but due in large part to its unusually high payment for order flow rates. Robinhood customers' orders were executed at prices that were inferior to other brokers' prices. So they would say, "Oh, we are commission free. You don't pay commission to uh, to go through us to execute your orders." But they had unusually high payments for the orders, right? So it seems like, say you're trying to get, I don't know, an option for um 23 cents per, right? The actual price would probably be like 22 cents per, and so you're paying an additional cent because you're not actually seeing the ask price, or the bid price, the real bid price, and the real ask price. You're seeing something that's like shifted like 1 cent both ways. So that way you're actually going to be paying the 23 cent per, but the actual average price for that option would be like 22 cent. So if you buy enough contracts that way, you're going to be paying a lot more over the course of however long you trade. And that's not even, I mean, that's just like a tame, like 1 cent off. I mean, the stock prices could be off. I mean, that seems to be how they make a lot of their money, is by screwing you over and charging you more for the contracts and the stocks that you're buying, as opposed to what the actual price would be. So in essence, even though it says commission free, they're taking commission in a different way. And it's actually more than some of the other brokers' prices. The millennial favored trading app is best known for pioneering the commission-free trading. Commission-free trading. Robinhood and the rest of the online brokerage industry rely on what's known as payment for order flow as their profit engine in lieu of commissions. Taking payments for order flow from Wall Street firms is controversial, but legal practice done by most electronic brokers. For Robinhood, it's the biggest revenue source. Robinhood made 180 million off trades in the second quarter. The SEC order found that Robinhood provided inferior trade prices that cost customers $34.1 million, even after considering the savings from not paying a commission. That's a lot of money. That is like FU money right there, okay? 34.1 million. Now, obviously, with how many people trade on Robinhood and how many orders are executed all the time, you split that among probably all the users, and you're looking at not that much per user. But I'm willing to bet that it's not spread evenly. I'm willing to bet that, maybe like out of that 34 million, 10 million of that is, peons like me who are only trading a couple $1,000. And then a lot, the remainder of it is like people who trade in blocks of millions of dollars worth of stock and options. So those people probably got way screwed over, right? Quote, Robinhood provided misleading information to customers about the true cost of choosing the trade with the firm. Brokerage firms cannot mislead customers about order execution quality. Market makers such as Citadel Securities and Virtue pay e-brokers like Robinhood for the right to execute customer trades. The broker is then paid a small fee for the shares that are routed, which can add up to millions when customers trade as actively as they have this year. Yeah, 34.1 million. Robinhood has experienced record growth in 2020 due to the unprecedented market volatility from the COVID-19 pandemic. Robinhood posted a record 3 million new customers in the first 4 months of 2020. Yeah, man, I hopped on that train, and I've been trading a lot this year because of that. I've made decent money. I mean, if I had more to put in, I'd probably make a lot more money. Sad face. But hey, some money is better than no money. But for these people who are getting screwed over in trades, and I don't know, maybe I've been screwed over in trades. I don't know. I don't think there's a way to tell. Um, really. I mean, you could probably go back and compare what you paid for certain things and then go back in time to the same date on another brokerage and see what they had. But I mean, I think that's probably the only way. But I don't know. Uh, Quote, the settlement relates to historical practices that do not reflect Robinhood today. We recognize the responsibility that comes with having helped millions of investors make their first investments, and we're committed to continuing to evolve Robinhood as we grow to meet our customers' needs. They added, we are fully transparent in our communications with customers. Yeah, now that you've been caught. About our current revenue streams, have significantly improved our best execution processes, and have established relationships with additional market makers to improve execution quality. Yeah, the SEC's charges come after Massachusetts regulators filed a complaint against Robinhood, accusing the trading app of predatory marketing and on inexperienced investors. Okay, so it seems that they were mostly going after peons like me then, because we know nothing. Wow. The company cites Robinhood's aggressive tactics to attract inexperienced investors, its use of gamification strategies to manipulate customers, and its failure to prevent frequent outages and disruptions on its trading platform. Yes, thank you. Holy crap, dude! I cannot tell you. Okay, now that they mentioned that part, so it wasn't just that they were screwing us over by like charging us more for the same type of trades. Um, it was also that they were screwing us over by all the frequent outages. Like when you go to trade because you're like, oh my God, Bitcoin is up to $22,000 and it was 16,000 at the beginning of the week, and you can't make a trade because Robinhood's freaking down. Well, then you lose out because by the time you're able to trade, the Bitcoin price has dropped in actuality to like 18,000, but on Robinhood it's still trailing at like 1950. So when you go to make the trade, it says that it can't execute right away because even though Robinhood is back up, they're trying to make it so that way you get the lower price uh, for what you pay. But yeah, that was really annoying. Trying to trade and not being able to. I mean, I went on Reddit. I'm on the r/Robinhood Reddit, and I mean I've seen so many complaints from people about that exact thing: the disruptions, the outages, the fact that sometimes you'd put in an order and it wouldn't execute uh, until it was like 10, 20 cents above what you put it, or a couple dollars, depending on what you were trying to buy. And even though the price that was shown on Robinhood at the time was either equal to or just slightly lower than whatever you put in for the order, but then it wouldn't execute until the best price became available, which was like more. Yeah, it was really weird. So, yeah, anyway, guys, that's it for today. Just I would highly recommend you go ahead and look back and maybe compare what if you trade on Robinhood, compare some of your stuff to you know uh, other brokerages, or honestly, I would just say diversify. Like I said, I trade with Robinhood, Fidelity, and Coinbase simply because you want a diverse stream. You don't want to just rely on one uh, brokerage because if they go down, because Robinhood goes down sometimes, then you might want to make your trades on Fidelity or whatnot. Anyway, guys, that's it for today. Go ahead and like and subscribe. Hit that share button and help me out. Make sure you click that notification bell too, so that way you know when a new video comes out. And I will see you guys tomorrow.